Paul, thanks so much for joining me in the studio. Glad to have you here instead of out of the shop. I like it. Now, you've brought some gold. We've talked about gold prices so many times this year. We're wrapping up 2011. Can you give me just kind of a review, a year in review in gold prices?
Thank you for having us again, Kristen. Gold has had a wild ride this year. We started the year at around $1,400 an ounce. It went up to as much as $1,900 an ounce. It's been up and down, and we're going to wrap up the year somewhere in the $1,560, $1,575 range. That'll be a 10 to 12% increase for the year for gold, so that's good. It's better than most conventional portfolios are doing, and of course, if you had the wisdom to get out in the $1,900 range, you had a great choice.
Yeah, those were record highs, right, that we saw this year?
World record highs at $1,900. Yes.
Unreal. Now, what about right now? What is the state of the market right now?
Gold is in the $1,560, $1,570 range. Now, keep in mind, in the end of December, there are a lot of the fund managers that are wrapping up their portfolios, and gold is a hedge. So it's time to liquidate those assets and turn them back into money and say, this is what we performed, this is our performance for the year end. So it's expected that gold drops at the end of December. Okay. And then right through January, we get a little bit of pickup, but in February, we really get that push again.
Okay, so yeah, give me a little bit of a forecast of 2012. So we're looking at a drop-off coming here pretty soon, and then what's going to happen from there?
Yeah, 2012, all conventional wisdom is that we're going to have a soft January in metals. As we ride the end of January, early February, we're going to have a pickup in the metals, and a lot depends upon the global politics. Of course, the euro is somewhat stabilizing. The economy there is getting better, at least temporarily, but the long-term prognosis is not good for the euro or for the dollar.
Now, if you were one of those people who held out through those 1900 record highs and you still had some gold right now, what would you recommend? Getting rid of it right now, or of course cashing it in right now, or holding out a little longer?
No, it's clearly a hold. You know, if you're in the metals, it's not a short-term game; it's a long-term game. For example, if you're take a look at the last 5 years. Okay, if you're a 5-year holder of gold, gold 5 years ago was $600 an ounce, and now it's $1,500 an ounce. That's triple. Well, nothing has tripled, particularly in a downturn economy. So it's a great long-term play.
Do you think potentially we could see those kind of record highs again in 2012?
2000.
Oh, wow. So it could be a good, like you said, it's a long-term market, and of course you want to check it out. Check Paul out, of course, at Manor Auctions or Grace Estate Buyers, your expert opinion. And we're going to have your opinion tomorrow on the silver market, a wrap up, and of course a preview of 2012 there too, right?
Thank you, Kristen.
Thank you so much.